Hello traders, good weekend, good day. Vladimir here, and this is a weekly market review and forecast for the coming week, 9 of April 2017. This will be short week, as on Friday we have bank holidays in Britain, Canada, Germany, Switzerland as well. It starts actually on Thursday with New Zealand and Australia with their own bank holidays. The main focus this week will go to Wednesday, and then we have the average earnings in Britain, which will be very interesting to see how all the Brexit situation starts to affect the market. Then we have the overnight cash rate in Canada with the statement coming from the central bank, followed by the press conference, of course. Unemployment rate and the employment change in Australia, trade balance in China following the same day. And basically that would be the most important thing. We'll have PPI to be published in US on Thursday, and Friday would end up with the core CPI, which I would pay attention to that. Despite of the holidays all around, I would pay attention to the CPI and the core CPI to be published in the US, as this would be the hint for the coming future cash rate decision of the Fed. So that's the main things, and it starts, by the way, it starts with a speech from Yellen on Monday. That's what we have this week. Now, let's talk business. Last Friday, a non-farm payroll was published. And the main important thing we'll learn there that the data is mixed. So was the reaction of the market. We saw ups, downs right after the decision, when the market was trying to figure out what is going to happen next. So what actually was published? The numbers, as you can see in front of your eyes here. The average hourly earnings drops to 0.2%. Right? While this one was revised actually from 0.2 that was published to 0.3. That's what caused the drop. And the non-farm payrolls itself, take a look what happened here. For the first time of long period, we saw data that is below 100,000 new jobs added to the market. Though unemployment rate dropped down to 4.5. What does that teach us? That many of the jobs added to the market are partial, not full-time jobs, and many of them are not full salaries, low paying. That's what's happening. That's basically the hint of what's happening on the market. Now the Fed is announcing, and probably will continue to announce, that the job market is stable, powerful, and great as it used to be, as it was published during all this period. But I would suggest to pay attention to these latest numbers, because that might be some kind of new trend in the data to come from the non-farm payrolls, okay, and that would be effective. So let's talk now on the charts and let's see what opportunities we have here to trade. Let's start with the S&P and the indices, as they have very interesting setup here. As I said, as long as this top holds, we might be looking for the sell opportunities because of all the cycle patterns we have here on the weekly. And it starts from the big one. From monthly, it goes with this double and with this triple. 1, 2, 3. And we might expect this correction. Now on a daily chart, we also got a triple cycle here. This is a daily chart by itself. Okay, we got 1, 2, range 3. And that's why the bearish pressure remains on. We currently have this trend line which keeps the highs dropping. And on the 4-hour chart, we got this double cycle correction, broken trend line, retested, respected, and lower lows. We got the correction, and now this highs hold. So as long as this is the situation, from my point of view, the pressure remains bearish. Only and only if we will break above this trend line and go above the last highs, we will have to step back and revalue the thing. So what are the targets we might be aiming on the shorts, if that is about to work? 38.2 down to 50 would be our targets from the daily cycle, of course, and then we drop down to this cycle, 38.50, the next levels. Okay, so that would be the one we follow, and of course, until the moment we will start to get a bullish divergence against us. That would be the main factor, of course. Now, I spoke about the S&P, but that's basically irrelevant for everything, okay? Whichever you will choose, you can go with and deal with the same idea. That was the Nasdaq, also creating here the convergence. Okay, we got the retrace, so pressure remains bearish. So just choose your index, and that's basic. The idea remains same as long as the highs actually hold. And now let's go back to Forex. Euro dollar, back to the trend line. The question now would be if it's about to hold or not. We have a bullish hidden divergence. Okay, and we have here a 4-hour chart divergence as well. Now it will be very interesting to see if it will be managing to hold it. If we go to the dates, okay, what can we learn from the dates? That there is nothing really stopping that currently, but we have 8, 9, and 12 as powerful days, as potential days for bottom. That's about to start from today, okay, and that, in other words, would mean we might start getting the setups for buys. But as long as we do not get setups for buys, ooh, my mouse get nuts here. As long as we don't have the clear setup for buys, we have to play that careful. And for those of you who are in shorts, keep it going. What are the setup for buys we will be looking for? False breaks. That's the main thing. So we will need false break, higher highs. Okay, and then we will be looking for retrace and buys. As long as it did not happen, we might be looking to sell rallies. So every rally that will happen in 2 waves on the shorter time frame, we will be looking for possible sells until the combination of the divergence with on the both divergences hidden with the normal one would correlate. And if it will be broken, by the way, that's what will apply the second scenario I was speaking about. Okay, the break, retrace, and sell rallies. And if that's about to continue, we are going for final low based on a weekly chart. But we'll have to see what it brings to us. Pound dollar finally is bringing us what we wanted to see. And now it will be time to value. Is that for real? Or is that about to stop as well? We want to see the pair dropping down to the bottom of the triangle, providing us the buy opportunities again. And this is that's the levels I would pay attention to. So let's start with the first one. If that would be considered as triangle, that's our levels. Okay, this is level number 1, zone number 1. That's zone number 2. On any of these zones, what we will need to see would be false break, higher highs, retrace, and buys here or here. Okay, what we will need to see is a false break first of all, and then higher highs to spot the reversal and make the move. By the way, if we also make this cycle, the first leg, and a full correction down to 161.8, that would still bring us to this zone, which is the bottom of the daily range. So bottom line, as long as there are no false breaks, we might be looking for sells, right? So if we get this, for example, as long as there is no false break, right, and we got a breakout down, we might be looking for the sell for continuation. Currently we have this trend line, right? We have this one as well developing, and that would be our levels to watch. Now if we take a look here on the dates, okay, take a look. We are, from one side, we are on the bottom of the channel, so if it's about to reverse, it should happen now. but we might go and break it. Why? Because if you take a look on the, if you observe now what happens here, the tunnel, which represent the current market flow, what it hints to us is broken back and forth, which means we are in a ranging conditions, which means breaks back and forth before a new trend is developing is very popular. So we cannot rely actually on the flow by itself. As per days for bottom, we had 7, 8 and 6, and actually by the end of previous week. So if it is about to hold the previous cycle we saw, we need to get false breaks now with the opening of the market. If we don't, we are going further, and further means at least down to 12 and probably even to 16 or 18 of the months. As per levels, that's our zone. So this is zone number 1. That will be zone number 2. If you remember, that's exactly correlating with the cycles we have been talking about. Okay, so what we might see here, as you can see, if the false break does not complete, is something like that, back to holding this zone, break and continuation. That's definitely a doable scenario. So keep an eye here and trade it carefully, but with big attention, with big interest, because it's really good opportunities we have here. Euro dollar we spoke about. Now the cross euro pound, and it's doing exactly what I wanted to see. So I would want to see this completing the second leg, or holding here some kind of a range, few more moves, and continuation for sell. Looking to sell rallies, bottom line, that's what it is. Okay, my view here did not change, and target would be gap from Brexit, now 81.50. Next one on the list, dollar versus the Canadian, and the bottom line for this one, as long as the top holds of the range, we should be looking for sales. Currently there are no clear setups which we can follow and say wow, but here comes the but. If we will manage to get this leg and false break here again, that should be a very nice sell opportunity. Of course we will be following this divergence as well. So if it does that for us, look for sells. This would be our sell zone here. Or if you want to play it safer, trend line, break below, retrace and sells. In terms of days and levels, let's take a look on dollar CAD. We don't have anything here on the 4-hour chart. Even the 1-hour chart resistances are further, so that would be really good if we can see that going and making the false break. Okay, and currently you can see also the trend remains bullish. Okay, so this was created at the end of the month. You see here 29.30, and we got the 29 as a bottom. That's why we continue with the rally. For sells, we don't have any day stopping us and preventing us as for now, so we might continue to 16, 18, which means bullish might remain on. Or in other words, if we go back here, okay, and we can say that we currently have supports, right? Let's go back to the support zone and the buy action zone we have here, and we have here, right? As long as they hold, we might be looking for the buys for continuation, this one or this one. Okay, that would be our levels for bouncing, which we will be looking to trade, and they also correspond with us for the 1-hour chart action as well. So that's really interesting pair to look for opportunities. Aussie dollar, take a look here, guys. Aussie dollar still at the bottom of the range, potential range. Now might cross that. Okay, this is the small one, and on the same time we have a big one, this one. Okay, so this, if will be hold and falls broken, we might be looking here to go for buy, and here is why. We got a cycle here, level. Okay, we are dancing around the 100. We have the divergence, but what we will need for that actually would be false break and cross above the high. So we will need this to happen. Then buy the bottoms. If we continue the downtrend and break through, we're going for the next level, which means here that's approximately 0.74, which will also go and correspond to this cycle. Okay, so 0.7450 down to 0.74 zone. That would be our final bottoming zone for this pair, where we would be looking again to join the buys. Okay, on the short term, of course, because long term, if we continue through, then we are going all the way to the bottom here around 0.71, 0.72. So remain bearish on the short term until the divergence on the bottoms here would complete, and then we'll switch to longs. In terms of levels, we have one here, 0.7450 zone, and on the 1 hour chart we have the 0.74 zone. Okay, so again, basically that brings us to the same conclusions. As per days, we need to look for buys because we are below the channel, and per days we have 12, 13 as a potential days. Okay, which means again few first days might remain bearish, and only then we'll be switching for long. So sell rallies could be actually a good thing to do. Aussie yen is another pair which we have as opportunity. This pair still remains under bearish pressure. We still have the trend line going lower. We still have the 200 moving average lower. That's around 82. On the 4 hour chart, we got the divergence here. So I would say if we can get this, okay, and the trend line to hold, look for the breakouts and sell down to 82. New Zealandian dollar, let's take a look on this one. New Zealandian dollar also so far holding the daily range, but also on the same time behave suspicious. That could be some kind of triple cycle here. 1, 2, 3 with some false break and rallies. So I would play careful here actually. I would play careful here, looking to buy below 0.80, 0.68 approximately, looking for buy opportunities if we actually manage to reach there. The cross in between these two, Aussie Kiwi, is doing exactly what we wanted, start to create a bullish hidden divergence. On the 4 hour chart we need to find a combination of the divergence as well. We have two cycles here, one, and that's the 100, that's the 161.8 of it, and this. Okay, so we have a monster here. Okay, we will be looking here for possible buys, or if we break through, we'll be looking for that to happen here. So the first zone is around 107 up to 107.50. We will need here false breaks and trendline breakouts to go for buys. Or if we continue through, we're gonna do that around 106 up to 106.50. As per days and levels for this pair, we are below the channel now. The days actually are good. We have 10. Okay, possible day for bottom, and if not this one, we only go through 13, 15, and then by the end of the months. And as per supports, we have one here and we have one here. That would be our zone of action. So keep an eye on this pair. Really should be nice opportunity. And of course, I'm getting my levels here from the forex crystal ball, my days and my levels to trade. That's where I take it from. Next one on the list is going to be the pound versus the kiwi. A pair that, where is that? Here we go. On the long term, this pair remains ultra bullish. I do expect this pair to rally at least to here, and probably even all the way to here. We still have also a gap around the 191. On a daily chart, that's where the trick begins, because on a daily chart we got this kind of range. From one side we got a trend line broken, and we might get it retested, but I would say that as long as 176, 175 holds, I would be looking for buys. So by ideal, we should face this to here, and we will be looking for monster buys from this area, or we are going to hold this little range we create here, and we're gonna look for the buys right from this area. Look for buys for this pair, aiming the weekly cycle zones as per days and areas we have here, and we have here basically the same zones we have been talking about. It's a beautiful confirmation by the crystal ball, and we have a beautiful channel here. Currently the trend is respected, so we might be following that. As per dates, take a look, 12, 13, 16, very powerful days for buys are coming, so our eyes are on it. Dollar yen, well, I'll make it simple. Okay, this pair is not clear, but as long as it holds here, look for buys. Okay, this holds the bottom here, right? So I would suggest if we can again gain the momentum above this high here, and we got two waves retrace, look for possible buys after that with the breakout. If the low will not hold and it cross through, let it go, because our next important level would be actually the duplication of this cycle, and this duplication would be here around 108. Okay, as per yen crosses, I don't have too much view besides sell rallies. As I said, for the Aussie yen, Euro yen as well, the only one that keeps my interest is the pound yen, because this one still holding this area, still has this divergence developing, which could be monster. But here is the reality: this convergence was not respected, which means we need a new convergence. Currently the false breaks continue to hold, and that's why I say as long as this is the situation, we are looking for buys. Currently the buys would be with the break above this high here. So what we will need to see is high here, two ways retrace and breakout, and we are after buys. If we break through that, that's a warning sign, because that could be the situation where we will start going down. Okay, and this down could take us down to 132, or maybe even 126 again. I know it sounds surrealistic right now, but it's doable. So keep an eye on this pair. If it does create for us the break above this high, the 139, okay, break above, retrace into waves, then we will be looking for the buys going with the weekly cycle, because I do expect this pair later or sooner to make a second leg up. Okay, so keep an eye on this one. Definitely interesting opportunity as well. And okay, cut franc. You know how bullish I am about this pair. I have been talking about that many times. I actually would like to see here some kind of retrace first of all, and then join the buys. So on the 4-hour chart, I would want it to top and make one more push down for me, and hold this kind of range opportunity and go for buys. So drop down deep to below 0.7460, 74.50, and looking again for buys, expecting the second leg here to continue and develop. Gold and silver, well, I remain bullish on gold for the long run, but on the short run there is a chance we start to get some kind of retrace here. And if we go, let's see what we have here. Actually got one was convergence which did not hold. Second one would be here, right? This and this. Okay, that would be our zone right now. If we manage to go below this area, create two waves retrace, we might be looking for short-term sell to make double cycle correction down to 12.30, 12.20 again. Definitely doable. There's a trend line here which we might go and retest, but here comes the but. if this scenario holds, we might be looking again for continuation of the gold towards the level of 1300, maybe even more. So definitely keep an eye here. Same with silver. I believe it should follow each other on the same idea. And one more which catch my eye is the natural gas, which had this cycle down, triple cycle, 1, 2, 3, fixed it, corrected it, and now has for us some kind of a range here. So from my point of view, from here up to 360, 370 is a sell zone, which means if we continue to create highs, it's time to consider go and sell the break of the trend line followed by this divergence. So if we can manage to continue the highs a bit, look for the sells. And okay, oil as well. You know how bullish I am about this one, but we have the divergence. We still did not get two waves correction. I still want to see two waves correction, and then of course look for continuation buys. And if we take a look on the oil, we have a beautiful channel now. So if you can go down to the channel, that should be a monster buy opportunities. And for short-term sells, that's our levels. If we reach there and hold, it could be pretty nice sell opportunities. And alternatively, as long as we hold the lower supports, that's a buy opportunities, right? Aiming to the top levels, as we explained, around 53, 50, 54. So that's all I have on my list. Of course, there are many more things developing, which just not triggered yet. By the way, one of them, before I forget, is Aussie CAD, which could be a very nice buy opportunity. We have been talking about these shorts, and it paid off. That's the zone. We have the gaps around the parity and slightly lower. We do develop here a bullish hidden divergence, and on the 4-hour chart we don't have divergence yet to block it, right? So what I would suggest here is this is cycle number 1, that's our target, and this is cycle number 2, and that's our target. How beautiful, right? So while this trend line holds and this trend line hold, every time we get closer, look for the sells down to this area. That should be pretty nice opportunity of the pair, and this would be also 50% retrace of this cycle. You see how everything correlate? That's what I call a magnet, and this way I believe we are going down to there. That's below parity, and that's what I would suggest to follow here. As per levels, we have these levels. Okay, we have this as level number 1, this as level number 2. So if we can come closer to here or try to cross down again, that should be a very, very nice sell opportunity doing the channel as expected. Okay, so that's all, guys. That would be the weekly forecast and review. I hope it was helpful for you, and please leave your feedback if you enjoyed it. Let me know what do you think. If you want me to share my view about anything specific you have and I didn't discuss about, just let me know, and feel free to share that with anyone who you believe can have some advantage and benefit by watching this video. We do that for the community, so you guys can trade better and get some good opportunities. That's all. That's the reason why I do that, just to help you get the better spots and better pickups for the week. So thank you for your time watching this video, and I wish you a wonderful trading week. And those of you who are members, I'll see you during the week with the daily updates. Thank you for your time, guys. Enjoy your weekend, the rest of it, and I wish you a wonderful trading week. Thank you. Vladimir Ribakov.